Hey, Saretsky here. As always, Canadian real estate market update with particular focus on Vancouver. If you get sort of value entertainment out of these videos, all I ask you to thumbs up and subscribe. Questions, comments, put those below. As you guys know, I've been doing this channel for going on 6 years, 3 million plus views. Always looking to expand this. I think we've created a really good community network here. I'm actually looking to expand that, a little bit further for those that are wanting to take it like another step deeper. That are more active, in the real estate space, whether you're investing, whether you're a developer, whether you're in the mortgage business, etc., is looking at creating sort of a private mastermind group, basically just sharing, pumping out really good research, in addition to what I'm already doing for free, having the networking ability with, if you have 100, 150 plus extremely talented people in the space, but not only that, just having like the networking ability in that respect, for me personally, being extremely connected in this real estate space, as I'm always approached with, various opportunities with developers, investing in private off-market deals, stuff like that. So I think that would kind of be an addition as a part of that, pay-to-play subscription-based service. So I'd love to hear your comments on that. Keep in mind that nothing's going to change with this channel. We're still going to be pumping out 2 to 3 videos a week, all for free. I'm still active on Twitter every single day, hopefully providing some value to you guys that have been following along and building this community over the last 6+ years. So love your feedback on that. But what I want to touch on this week is an update to kind of how I'm looking at things in the market, because as you guys know, I got extremely bullish on the housing market in late summer, early fall of 2020, as I was clearly seeing, M2 growth in Canada, the money supply expanding, the Bank of Canada doing $5 billion a week of QE, insisting they would hold rates at zero until into 2023, that it was undoubtedly that we were going through this massive currency debasement, and that was going to be extremely bullish for hard assets such as real estate, and lo and behold, we know that national home prices thereafter accelerated to all-time record highs. I remember, tweeting out that I thought the next move for the Canadian housing market would be, a face-ripping rally higher. I took a lot of slack for that. So you guys know that I'm willing to sort of put myself out there and make predictions. What I'm looking at right now, the framework here, we're in February 2022, is I think that we've put the highs in. I think that we've put the highs in for a lot of the market. I think that we're starting to see the market shift. Again, feet on the ground. Maybe this isn't going to show up in data in the next, 4 to 8 weeks, but I think that we're starting to see the housing market shift. And what I mean by that is we're just seeing more and more anecdotal stories of houses that are getting listed for sale, having multiple offers, and either not getting an offer, or they're getting 2 offers and they're still going $200,000 over, because it's those buyers that have been kind of trained to compete. They've been trained over the last 18 to 24 month bull market that they have to get crazy and they have to pay these aggressive prices. And this is very indicative of sort of that blow off top. I remember seeing this in 2016, and I really think that we're getting there. I was just having another conversation with one of the largest real estate online search portals in Canada. Again, I'm sure a lot of you guys will use them. I'm going to keep the names out of this, but we're just having discussions saying, hey, listen, like our website traffic is starting to change. It started changing a couple weeks ago. And so again, if I look at the seasonality pattern of real estate, is you finished December 2021 with all-time record low inventory. From a seasonality perspective, January inventory is always low. There's always a weak number of new listings, and you start to, and same with February. And as you get into March, April, May, that's usually when you start adding the most inventory and new listings on a seasonal basis every single year. And so I think that kind of created the perfect storm for blow-off tops. And again, if you go back to 2016, it was December, January, and early parts of February that we had that blow off top in 2016. And so I really think that we're kind of at that pivotal point now. I think that we'll look back at this market 2 months from now and say, oh yeah, that was the top. So again, maybe I'm wrong, but as you guys know, I'm willing to make sort of bold calls, bold predictions. I'm just looking at where this market is going, and saying, okay, it's been a good run. It's been a great run. If you're part of that run, that bull market run, I mean, having national home prices ripping to all-time record highs pretty much across every city, it doesn't last forever. And I think, as we can clearly see, you've got the 5-year fixed rate mortgage running up to basically 3% today. It's almost doubled. It's almost doubled from what it was during the pandemic lows. You could get 5-year fixed rate mortgages. I had clients getting 5-year fixed mortgages in the depths of the pandemic for 1.4%. I mean, so we've basically doubled from there. The only problem is that if you've got that variable rate mortgage, which is still about 1.5% today, we will get a rate hike from the Bank of Canada next week to 25 basis points. I think you can take that to the bank. I strongly believe it's not going to be 50 basis points. I strongly believe that they won't be holding rates. I strongly believe it's 25 basis points baked into the cake. So what does that do? That now brings your variable from about 1.5 to 1.75. I think you'll start to see the banks, commercial banks, RBC, TD, CIBC, will start to tighten as well on the variable side. So what that means is that the spread, the discount rate on your variable rate mortgage will start to shrink. We're already starting to see that. So for example, they don't necessarily need the Bank of Canada to begin, to further raise rates in order to see the discount fall on that variable rate mortgage, which means that you could start looking at a variable rate mortgage that gets closer to 1.8, 1.9. And then you throw on what I think you get, I'm going to stick with this view. My view on rate hikes hasn't changed. I think you get 3 rate hikes this year from the Bank of Canada. So it's called 75 basis points. So that starts to bring your variable rate mortgage closer to 2.5. Maybe your fixed rate trickles a little bit higher and you get that closer to 3.2, 3.3, 3.4. And I think that becomes a natural drag on the housing market in combination with exhaustion, right? I mean, we just had record home sales for the past two consecutive years. You've pulled a lot of demand forward. I think naturally the economy is slowing. Obviously, as you guys are well aware, I'm not going to pretend to be a geopolitical strategist here, but I think that the Ukraine, Russia, tensions or war, whatever you want to call it, I think that's going to have psychological impacts on markets. I think we're already seeing, the whipsaw volatility, not only in crypto markets, which is kind of the only real smoke detector left in the room. I mean, I think Bitcoin, which trades 24/7, is not manipulated by central banks, is really your last remaining smoke detector, right? And seeing the volatility and the correction in that market suggests to me that you're going to see more volatility across other asset classes as well. So that's kind of my thoughts on housing. Rarely do you see me pivot, but I think that you can bookmark this video, come back to it in 2 to 3 months. I think we'll be in a different market. Again, that's not saying that there's going to be this massive sell-off in housing. But I think what I think is basically, listen, if you bought a detached house in January, February of this year, I think you're looking at negative equity in the short frame. I think you're looking at, if you bought in January, February, and you say, okay, well, where's my house value in 12 months from now? I think there's a high probability that you could be underwater, because I think what we've seen, right, is like houses being listed for 1.5. comps being at 1.65 and you paying 1.8, listen, you paid a huge premium because there was zero inventory on the market. You got into a competitive bidding war and you paid, more than you should have. And so that's kind of how I'm looking at things right now. And, as it comes to the Bank of Canada, again, the market is still pricing in 6 rate hikes. My call is for 3 rate hikes this year of 25 basis points each, 75 basis point move. That leaves your overnight rate at 1% by the end of the year. Again, let's watch and see. I think that you cannot taper a Ponzi. You guys have to remember that as we talked about, it's not that, he doesn't want rates to go up because he's got real estate holdings. It's like, listen, every global sovereign debt bubble has always ended the same way, and it's ended through currency debasement. Governments always opt for the path of least pain, which is, okay, let's debase the currency, let's debase the value of our obligations. And so I think that's really what we've seen over the past couple of years in particular. And I think that just, again, because inflation runs at 25, 30, 35-year highs, that I don't think interest rates necessarily have to follow. I think if you have a debt problem, inflation is arguably good for that debt problem. And so I always point you to, I think, the maestro of economics, which is Ray Dalio. He just put out a really, I don't know what, a 300-page book, which basically, again, tells you that, in his view, runs the largest hedge fund in the world, not a big deal, that we are at the end of this long-term debt super cycle, and that, again, just, national home prices might be up 28% in Canada, but your house didn't get 28% better. Your land size didn't get any bigger. What happened is the purchasing power of that dollar, which was selectively debased. These were policy decisions that were made available to the government to debase that currency. And so what I think the path forward here is to save face that there's some political pressure to tackle inflation. There's political pressure that central banks have to at least sneak in a few rate hikes due to political pressures, and they will keep going until something breaks. And I think it's going to be it's not going to take much to break it, is my honest view. And I'm saying this because we're already starting to see the housing market slowly, very slowly. Again, don't get me wrong, it is still an extremely competitive housing market. It is still a seller's market, but you're slowly starting to see that market pivot. And so I think that the market is going to do the work for the Bank of Canada and the rest of the central bankers. So that's how I'm looking at things today. I'll keep that video relatively short. Hope that helped. As always, we'll see you next week.